We've all read the headlines. The market's gonna crash. It's gonna collapse. Interest rates are gonna skyrocket. So many voices out there, and so what do you believe? If you've been reading these headlines, you're probably just as confused as most people. If you're a buyer in the market and seeing that rates keep fluctuating and don't know where you're gonna end up, perhaps you're a seller and you're seeing prices have some modifications as well. Is it a good time to sell? And if you're an investor and thinking, should I even purchase an investment property now? I'm Gia Silva, and today we're gonna dive deeper into what all of this means to you. Okay, let's get into interest rates. What's gonna be happening to interest rates? Now, we know in the last few years, interest rates hit an all-time low, going to 3% and 4%. And just this year, because of the recession, interest rates spiked up, and we've been seeing them fluctuate, hitting now 6%. So buyers right now on the market are wondering, are interest rates gonna get to 7? Are they gonna get to 8%? Well, experts are calling for interest rates to increase. So we know that we are gonna be seeing rates go above 6% and perhaps even get to 7 or 8%. You're a buyer and you're ready to buy and you were quoted right around 6%. And now you're hearing that interest rates are gonna be going to 7, maybe even 8%. What do? You should, one, take a look at what your mortgage payment is with the interest rate that you were quoted, whether it was 6%, 6.5%. Also, speak with your lender so they can run numbers on your payments with an increase in that rate, 7, 8%. Then you can decide if that payment is still within your budget. You may decide to look for properties that are in lesser in purchase price so they can keep you at right around the monthly payment that you were looking to have. And yes, seller concessions are back, which means sellers are now willing to give credit to buyers towards their closing cost or even to lower buyers' rates. And what about property values? Are we set to depreciate? Well, I know it's confusing because this year when the market shifted, we have been seeing modifications in listed prices. $20,000, $30,000, sometimes $100,000 of a price modification of a listed property. So what does that really mean? It does not mean that properties are right now depreciating. What it means is that the strategy of pricing is probably incorrect. Let me give you an example. Our team just listed a property in East Long Beach, very close to Cal State. And within days, because it was priced aggressively as well as marketed right, we received over 9 offers on the property. Yes, over asking. That tells you again that once a property is strategically priced and marketed aggressively, it is still going to get multiple offers, especially if there are no properties on the market. Now, some of the headlines that we're reading may be partially right. We may be seeing some depreciation in property values, 7 to 10%, let's just say even 12%. But let's put that into context. In the last few years, we have seen appreciation, especially in California, hit 20%, 30%. In some cities in Southern California, even hit 40% appreciation. That's the most we've seen in real estate history. So 7 to 10 or even 12% depreciation in values would kind of bring us back to a new normal market. Make sense? And inventory, will we be seeing more properties on the market? Well, there's definitely the demand. We are gonna be seeing more supply come into the market, which again will level out the market. So bottom line, all the headlines and everything that's going on is all situational. If you're a buyer and didn't get to take advantage of the 3% interest rate a few years ago, or even 4% interest rate earlier this year, good news is you can still purchase a property today with 6% and avoid getting to 7 or 8% next year. Also, understanding your budget and understanding if at 6% or even at a higher interest rate, you're still able to afford your property comfortably and a mortgage payment comfortably, then you should probably think of purchasing. If with the new increased interest rates, it is way out of your budget, there are still a few options. You may look into asking a seller to help you buy down your rate, or look for a property that fits in your budget comfortably. And if you're a homeowner and have been thinking about selling your property, this may be a good time to also run those numbers and see what your property is at today and where your property might end up next year with a new value. Now more than ever, it is so important to have complete clarity as to your specific situation and to have a real team by your side, your CPA, your financial advisor, your real estate professional, your mortgage lender, so that you know what is going on and what that means to you so that you can make the best moves and the best decision. As we move through 2022 and into 2023, we're gonna keep our finger on the pulse to let you know what is happening in the market. If you found this video insightful, don't forget to like, comment below, and follow me for more.